Now let's bring in a Yahoo shareholder, Larry Haverty of Gabelli and Company. Larry, thanks so much for joining us from Newton, Massachusetts. Your take as a shareholder on this report that Yahoo might sell its most valuable assets.
Well, Emily, this is really what we've been fighting for, and I've been on this network, I think, since May, with this being the right course of action. When Silver Lake invested in Alibaba, it basically validated what we thought was the price of Alibaba. And this Chinese internet is growing like a weed. 30 million new users per year on the internet. We're involved with a company, Tencent, that has 700 million users just within China. So it's really worth a lot of money. The question is, how do you deal with the tax situation? And I think probably the Yahoo people found their way to Dr. John Malone and his folks in the Liberty group of companies, and they have structured deals like this. And we've talked to Bob Willens, who's the tax consultant, I think, who's worked with Liberty on a lot of this stuff, and he's very confident that the deal can be done in a tax-efficient manner. So you add all the things up, and it looks like these assets after tax are worth about $15 a share. And that's actually what our brokerage subsidiary and our analyst, Brett Harris, has been carrying in print for several months. And this was in the brokerage subsidiary, one of our top 5 recommendations for a long period of time. But I think they got frustrated with how long this has taken for the board to do, in my opinion, what's the right thing. So there's $2 of cash, and you're looking at basically $1.4 billion of cash flow for Yahoo being valued before today at 1x cash flow, and a credible broker, Goldman Sachs, actually recommending sale of the stock earlier this week. And what this is really, in terms of the way Gabelli works, right down the center of the fairway. The market, the public market value of Yahoo was not recognizing the private market value of these assets. And now the question is, how high is the stock going to go? AOL, which is a very problematic company, I think sells at 4 or 5 times cash flow. So if you put a 4 or 5 multiple on the consolidated cash flow and hope it doesn't go down too fast like AOL's is, you get to $20 a share. We've seen TV stations transact in the media business this year at 10 times. That gets you to $25 a share. I've said on your network a number of times that this asset is strategically attractive to a number of people, not the least of which is Microsoft. So I think somewhere north of $25, we're going to see this thing settle out. I'm just delighted. The board's doing the right thing.
Yahoo is up in after hours on these reports. But Larry, you heard what Corey was saying earlier. Is Yahoo really going to sell the most valuable parts of its company? And if Yahoo indeed does this, what is left? Well,
I think what's left is basically something that needs to find a home somewhere else. We saw this with T-Mobile and AT&T. And these guys have inferior market share in businesses. And in this slow growth economy, the people with inferior market share that are losing share, investors are not putting a particularly big multiple on it. And Microsoft right now is losing about $2 billion a year on the internet, Emily. This would be a marvelous fit for Microsoft. They have a joint venture with Yahoo in the search business. So, you know, why not buy the whole cow? They're just renting some milk right now, and they really can't afford for the Yahoo search business to basically stray away from them, because Google is just eating their lunch. They have made some progress recently in search, but I think Microsoft at the end of the day is the most logical buyer for these assets. And you're looking at a transaction for Microsoft, once these assets are sold, the non-operating assets, in the neighborhood of $12 to $15 billion. And that's just, I think it's less than half of Microsoft's cash hoard. So that's what I thought originally was going to happen. That's still my best guess.
This seems to have been going on for months, though. Why is the process taking so long? Is Yahoo's board simply resistant to some of these ideas that you have for the company's future?
Well, I think Jerry Yang has basically been operating as if he owns the entire company. He was a founder, and Certainly, at one point, he made a lot of money for shareholders, but the world has kind of passed him by. And the reality is he owns a part of the company, but unlike things like Groupon and Google, he doesn't have, with super voting shares, control. And I think the board has acted responsibly. I would note that one addition to the board recently was Patty Hart, who's the chairperson of IGT. I just met her for the first time a couple weeks ago in New York at an analyst meeting, and she is right on the stick. She was saying all the right things at this meeting about IGT, and I think she understands what the role of a CEO is in terms of maximizing shareholder value. And I think the board has, finally taken control of the company from Jerry Yang with the help of people like Dan Loeb, and we've been doing our part. And they finally are doing the right thing for the shareholders. If this is the course of action that they're pursuing, and the market's recognizing that in these Asian assets, particularly with regard to Jack Ma, that Yahoo made a spectacular investment that more or less is up 10 times, which is not unusual given what's going on in China. And the shareholders haven't received any money for that. So it's just shareholder payday. It took way too long, but payday's payday.
But if Yahoo doesn't take this course of action, Alibaba and SoftBank could potentially prepare a bid for all of the company. We will be watching to see what happens here. Larry Haverty of Gabelli, thanks so much for joining us. Always appreciate your thoughts
Emily.
Here on Bloomberg West.